Hello, everyone, and welcome back to Staking Mondays. Staking Mondays is a weekly show to share knowledge from key staking industry leaders with our community. And of course, this is all powered by stakingrewards.com. At Staking Rewards, we are helping investors navigate the landscape of yield-generating digital assets, helping them find the best opportunities to earn interest on crypto. My name is Ken, and I'm extremely excited to welcome today's guest, one of the Forbes 30 Under 30 in Asia. Tushar Aggarwal wears many hats. He started the crypto podcast Decrypt Asia, works as a venture scout in LuneX Ventures, and runs Persistence, a platform that lets users earn liquidity rewards while they stake coins. Now, Persistence is an interoperable protocol built to facilitate the creation of next-gen financial products. The Persistence tech stack provides the infrastructure to effectively bridge the realms of DeFi and traditional finance in a variety of areas, whilst also enabling the creation of innovative crypto-facing solutions to expand DeFi and NFT sectors. So pSTAKE is live now at app.pstake.finance, and the uncapped launch is set to be released on September 20th. This pSTAKE is a liquid staking protocol built for unlocking the liquidity of locked proof-of-stake assets such as Ethereum, Atom, DOT, Luna, and Sol. So welcome today, Tushar. How are you doing?
Thank you so much for having me, Ken. It's great to be on the show. I've been a power user of stakingrewards.com for quite a while, so it's an absolute privilege and honor to be on Staking Mondays.
That's very great to hear, and just want to congratulate the channel for just passing 1,000 subscribers. I know it's no great feat, but hopefully we'll get to 10,000, 100,000 soon thereafter. So Tushar, thank you for those kind words, and let's dive right in today. So just a little icebreaker question to get you started here. So which crypto projects spiked your interest first outside of BTC and Ethereum, I guess outside of Persistence as well, and why was it?
Yeah, so I mean, in terms of my journey in crypto is based out of Singapore for almost close to a decade. In 2016, till 2016, I'd been investing in real estate with my parents, had a liquidity event, and was looking to invest into crypto. And in 2017, for the folks that were in the industry, you would remember that some of the projects like Republic Protocol, Kyber Network, Zilliqa, Icon, were Bluezell were humongous projects back in sort of the 2017 run up. And the great thing was that all of these projects came from Singapore, and so I got a good chance to get exposed to sort of on the ground exposure to some of the teams and folks working on this project. Obviously, folks on the fund side. So a lot of folks who run Defiance Capital, QCP Capital in Singapore, were all sort of part of the Singapore crypto ecosystem. Obviously, I think since then it's kind of died down a little bit, but that was sort of my first entry into crypto. It did decently well on my personal portfolio in 2017, which allowed me to quit my management consulting job and get into crypto full time. And that's when the podcast came about. I started writing on Tech in Asia, which led to a full-time opportunity at LuneX Ventures, which is the crypto arm of a traditional VC called Golden Gate. And then over a period of time, I wanted to be on the operator side as opposed to being a capital allocator. And that's how Persistence came about. And then within Persistence, we're creating a whole bunch of projects and products. And so we've had this sort of meandering journey where we've listened to our community, we've done a lot of research to figure out what to bet on next. It's going to be interesting 1 or 2 years from now, because again, some of the things that are already big, you can't bet on those things. So we always try to stay ahead of the market and be like, okay, what's going to be big in a couple of years, and try to make products accordingly. So yeah, that's kind of in a quick nutshell what my journey and story has been. Absolutely love the space. Have been on the media side of things, have been on the investment side of things, have been on the technology side of things, and absolutely love the industry.
Yeah, and being on the media side of things can obviously help you in terms of marketing and putting your thumb right on the trend. And it seems like you've done that here with some of the products that such as pSTAKE that's coming out, and really excited to get into some of these questions. And just want to welcome all the audience that is joining us now. Hey guys, how are you doing? So let's dive right into Tushar. So I just want to start talking regarding Persistence mainnet. So the data on staking rewards actually suggests that over 80% of eligible XPRT are being staked. I mean, this is an extremely high number. relates to higher security in the network. So what factors helped you achieve this high rate?
Yeah, so I think, I would be lying if we didn't have some of the seminal work done by other projects. So, I think most notably Akash Network, which is another project in the Cosmos ecosystem that had even higher inflation than Persistence did. But, basically, our thought process was that it is actually a little bit counterintuitive where, folks think that if you have high staking rewards, then the sell pressure from the staking rewards is going to be counterproductive. But I think what ends up happening is that from an end user or end token holder or end token staker perspective, I think fixed income is this sort of web that just catches hold of you, which is what stakingrewards.com as a whole is built on. And so what we decided to do was have a range of 25 to 45% staking rewards based on the staking ratio. So all Cosmos chains have this parameter of a minimum inflation and maximum inflation. So we've put a minimum inflation of 25%, maximum of 45, but we kind of hover around 35%. Right now I think it's about 37.5%. So I think that has really helped us to achieve a very high staking ratio. What we also actively try to do is work very closely with our investors, our advisors, our validators, community members to make it really easy for them to stake XPRT. And then I think overall ultimately it's the community's fundamental belief in what we're trying to do, and over a period of time having folks who have fundamental belief in the project over a much longer term horizon, and so that has become our token holder base. So I think those are some of the things that have contributed to having a high staking ratio. I think still one of the highest staking ratios in terms of the entire Cosmos ecosystem.
Yeah, it's quite impressive, and I think you hit the nail on the head there. It's not only the attractive APY, APR that can be earned by participating in the network as a validator, but it's also the communication you have with your community seems to be really on point as well, because there are other networks that offer high APY to stake with them as well, but they don't have as high as participation numbers. So maybe it has something to do with your background in media that translates over to the community. So very cool to see that, and let's keep that number as high as it is now. So shifting gears over to pSTAKE, which is currently live, app.pstake.finance. This protocol will allow for the issuance of representative tokens on Ethereum, which are backed one-to-one by native assets staked on POS chains. These are called staker tokens, and they can be utilized in the vast DeFi ecosystems of Ethereum. Now, before we get into the kind of utility those tokens can present, what validators will support these cross-chain staking responsibilities, and what does the selection for these validators, what does that process look like?
Yeah, so what we're doing is we're going with a subset of high-quality Cosmos validators who are going to be receiving all the atoms that we're going to attract through the pSTAKE platform. So some of these validators are Stake.fish, Chorus.One, Everstake, Figment, Cosmos Station, Audit.One. So these are some of the high-quality validators that have had a good track record. A lot of them have been involved in the launch of the Cosmos Hub itself, back in 2018, 2019. Essentially, for now, what we wanted to do was not complicate things too much for ourselves and not expose the users of pSTAKE application to too much risk, which is why we've kind of chosen some of the highest quality validators. Now, typically one question that we get is that, because these are already high quality validators and they already have a lot of stake, a lot of coins already staked to them, does pSTAKE not lead to greater centralization of the network itself? And the answer is yes. And so from a longer term perspective, what we want to do is, attract smaller validators who have good track records. And there are different ways to judge that track record as well in terms of uptime, in terms of number of blocks missed, in a certain number, in an X number of, previous blocks, in terms of what is the maximum change in commission of the validator itself. how long has the validator node been running for in the active set. So there are multiple, parameters that you can put, and the validator set, which is receiving this atom delegations from the pSTAKE platform, can be a very dynamic set. Right now, what we're doing is these 6 validators that we have, all the stake that is being attracted, all the atoms that are being attracted from the users of pSTAKE are going to be distributed equally amongst the 6 validators. From a longer term perspective, again, what we want to do is make sure that it's not split equally, but it's split in a certain proportion, which makes sure that the underlying network does not become too centralized, while still ensuring that we're protecting the end users from like slashing risk and things like that.
Yeah, very important that you're keeping this decentralization topic in mind when selecting validators, even though now you seem to be selecting the bigger validators that are more reliable, been around for a while, been around for the Cosmos Hub transition. In the future, you have a vision and plans to make this more decentralized for the smaller guys, which is greatly appreciated from your community, I'm sure, and from an entire ecosystem that appreciates decentralization efforts. So pSTAKE will also support major proof of stake networks like Cosmos, you mentioned, Terra, Polkadot, Solana, and Ethereum 2.0. So what's your evaluation process when selecting new networks?
Yeah, so from a go-to-market perspective, we've already gone to market. You mentioned app.pstake.finance is already live. We have STK atoms as the first staked coins that can be minted on the pSTAKE platform. The way we have designed the application is such that it is very scalable across multiple other Cosmos-based coins. So coins like Luna, AKT, which is Akash Network, Persistence, so XPRT, and Injective Protocol, Band Protocol, Kava, Iris. So these are coins that we can easily expand to. In parallel, what we're doing is sort of creating parallel teams within the pSTAKE team to do implementations for other ecosystems. Because again, in terms of how staking and unstaking works for different POS networks, it's very unique. So how staking works on Solana is very different from how staking works within the Cosmos ecosystem. And the staking unstaking for ETH2 again is still something that is being discussed, especially the unstaking part. So I think those are things that we'll sort of try to do in parallel as we go after the different ecosystems. For now, what we're focused on is the Cosmos ecosystem. So our belief is we've been early Cosmos community members. We were ourselves involved in the launch of the Cosmos Hub. Persistence is a Tendermint-based chain as well, so we ourselves have been part of the Cosmos ecosystem, and we have built, through different activities that we have done with the Cosmos ecosystem. So whether that was the stake drop campaign that we did last year for Luna, Kava, and Atom stakers, so we've built, strong relationships and brand awareness within the Cosmos communities. So from our perspective, it made the most amount of business sense to go to market with Tendermint-based coins. Now, again, the announcement went live, I think yesterday, if I'm not wrong, or even today, where we'll be doing the token distribution for pSTAKE through Alpha Launchpad. And so again, what we now want to do is kind of tap into the Ethereum community because we have very strong foothold on the Cosmos side. What we now want to do is penetrate sort of the hardcore DeFi users as well, and sort of create this nice synergy between the two communities. So I think from a high level perspective, that's kind of how we're thinking about it, and we'll kind of keep betting on different communities as and when different POS communities as and when they become bigger and grow.
And great to hear that you're bringing in sort of a subset of teams to help with the integration that are specialized within those networks that you're onboarding. So really exciting to see what the next projects are onboarded, maybe in the Ethereum DeFi ecosystem. So stay tuned, guys, for more updates on that side of things. So getting into the staker tokens themselves, maybe a really high level explanation of what a staker token is. How can staker tokens help users to unlock the benefits of staking returns while avoiding lockup periods associated with traditional unbonding times from proof of stake networks? Give the users a good idea of what this staker token is and like what are the benefits that it brings to the table?
Sure. So, I mean, again, I think to make things extremely simple, because what we have realized is that staking itself is something that folks are now coming to terms with and starting to realize what staking is. So before going into what liquid staking is, just to spend a minute on, staking, a lot of folks are DeFi users. And so you might stake your Aave, you might stake your Sushi, you might stake your Alpha coins. But when it comes to POS coins like Atoms, like Dots, like ETH, soon to be ETH, essentially where the staking rewards are coming from is the same place where rewards come from for miners as far as POW networks go. And so Atom stakers are actually taking part in consensus as the validators come to consensus on transactions on the Cosmos Hub. And how that works is that typically if I have, say, Atoms, I will stake my Atoms through a wallet onto one of the validators. And right now the APYs are about slightly more than 10%. So if I buy 100 Atoms, I'll have 110 Atoms by the end of the year. And overall, if the dollar amount of Atoms has stayed the same or increased, I'm well off. But what happens is once you have staked your Atoms, you will keep accruing rewards, which are your 10% staking rewards. But you can't really use these Atoms anywhere else now. What we do is we issue, like you mentioned, representative coins. So if you stake through the pSTAKE platform, your Atoms get staked in the backend APYs on the staking rewards. But what we do is we issue these representative coins, which are called STK Atoms. And these STK Atoms are free to be traded anywhere within the DeFi ecosystem. Now, one thing to note is that we're issuing these STK Atoms not on the Cosmos chain, but on the ERC20 side. Why are we doing that? Because for now, Ethereum and ERC20 coins have the most amount of composability and liquidity to benefit from. And so, in this situation, now you're earning staking rewards in the background in the form of Atoms, but now you have STK Atoms as well, which are liquid and you can do anything. Now, what you can do is you can supply these STK Atoms as liquidity on a DEX to an STK Atom ETH pair. Or you can use these STK Atoms as collateral to take out USDC as a loan in case you want to buy more Atoms. And so essentially what we're trying to do is trying to increase the utility of Atoms and other POS coins without affecting network security. In fact, incentivizing users to stake more because suddenly they can stake those coins, keep earning staking rewards, but then do other things with their representative coins as well. And obviously we'll have certain incentive mechanisms in place for folks to mint STK Atoms, supply liquidity to a DEX, and basically instead of just earning 10% staking rewards, suddenly those rewards become 30, 40, 50, 70, 80% depending on how those rewards are being given out to the end users. So basically, ultimately, if we look at different stakeholders' perspective, so the underlying POS protocol, they're happy because their staking ratio is increasing because more and more people now want to stake because they're getting such huge APYs. We're happy, obviously, because our platform is being used. The end users are happy because they're getting good APYs. So it's a sort of creating a win-win-win scenario. So yeah, that's the kind of overall overview of the product and kind of our thought process.
Yeah, very good description there. And I think it really translates into a better experience for everyone involved, right? The networks that are increasing staking participation, the users that are getting higher APY. Imagine being able to use an Atom token in DeFi products that's still getting staking returns on the back end. It's really amazing stuff here. And I think our listeners are certainly going to dig deeper into this if they haven't already. But if you're searching for the best yield, this is definitely a product for you. Now, in terms of collecting on these staking rewards, so when transferring an STK token to a different wallet address, this actually triggers an automatic rewards claim. But are there any thresholds for rewards claims, and who covers the gas costs for those transactions?
Yeah, so there are no thresholds for rewards, but if you're transferring STK tokens from one wallet to another, there's an auto claim reward, like you said, claim of the rewards, like you mentioned. The gas fees for that are going to be borne by the end user, for similar to any DeFi application. Not to confuse the end listeners, but the only place where we're covering gas costs is the minting of P atoms, which is like a wrapped atom within the pSTAKE application. That's the only place where the gas costs are going to be covered by the pSTAKE team. Everywhere else, in terms of once P atoms have been minted, and again, the difference between P atoms and STK atoms is that P atom is just like Ren BTC, which is just a wrapped coin on the Ethereum side. STK atoms are actually coins. You can convert your P atoms into STK atoms, and STK atoms are the ones that are accruing staking rewards. Once you have come into the pSTAKE application, which is basically you have minted P atoms, every action that the end user does, they pay the gas costs. Only for the minting of the wrapped atoms or P atoms, the gas costs are borne by the persistence / pSTAKE team.
Okay, thanks for that clarity there. So gas costs covered when going to P atoms, but not when going to STK atoms or when moving STK atoms normally from wallet to wallet. There's no gas coverage bared by the end. Okay.
Absolutely.
So I know our team's mind is kind of running wild with the kind of secondary products that can be created from the STK tokens. But in your mind, what secondary products could be built, or what would you like to see being built or utilized with these STK tokens?
Yeah, so I mean, high level perspective, although we're branding and positioning pSTAKE as a liquid staking platform, longer term, how we see ourselves positioning pSTAKE is as a, proof of stake asset management, or proof of stake as an asset class. I think proof of stake itself, according to the data from stakingrewards.com, I think the total market cap is north of $600 billion for all POS coins. And I think the staking ratio is about 26%, which roughly translates to slightly more than 110 or 120 billion dollars in assets that have been already staked to secure multiple POS networks. So I think from that perspective, what we're essentially doing is trying to unlock the liquidity of these particular assets. But I think I digressed a little bit there. What was your question again? Oh yeah, in terms of use cases. Yes.
Yeah.
So over time, what we want to do is once you have unlocked liquidity for these POS coins, like I said, I mean, right now, if we think about what are the use cases in DeFi in general, I think DEXs, borrowing, lending, derivatives platforms. I think those are the typical use cases, and those are the use cases that we'll be going for as well to begin with. I think some of the other interesting things are definitely like creation of POS indexes and things like that, where folks are betting on like a basket of POS assets and not giving up staking rewards. So they're basically betting on POS assets to increase in value over time, while having a fixed income element of continuing to accrue staking rewards as a way to sort of mitigate their downside risk as well. And so I think those are some interesting products. You can obviously create vaults over time where people just deposit USDC, and you basically manage their USDC and allocate it to a bunch of POS assets, giving them again the same thing, which is the upside on POS assets in general, while mitigating downside through continuous staking rewards that are accrued. And so you can have like high, medium, low risk kind of investment products, so to speak, focused exclusively on POS assets. So the minting of STK tokens is just the first piece of the puzzle, and that generates a small amount of revenue for us. Then obviously a percentage of the staking rewards themselves, which we keep. But then over time, the really big revenue generator for pSTAKE is going to be asset management and creation of indexes and things like that. And then the great thing is that all of these fees that is being accrued gets distributed to both pSTAKE stakers and XPRT stakers. And so that's how we get the whole persistence and pSTAKE economy going.
Yeah, absolutely grateful that you just gave some great examples of unicorn type use cases for pSTAKE and for these STK token assets. I hope the developers and builders in the community were listening to that. I know we were. So excited to see what comes down the line in the next year or so once these secondary applications start coming to life. So in regards to pSTAKE's governance token that was recently announced, this is the pSTAKE. So tell us about the economic benefits to holders of this token.
Yep. So, like I think it's a great transition from the previous question as well, right? So the pSTAKE token is a governance plus a fee sharing token where, the stakers of the pSTAKE coin itself, take part in certain decisions with respect to parameters on the pSTAKE application. And what they also do is they get a percentage of the fees that is being generated, and we'll be communicating these numbers of what percentage of the fees that is being generated on pSTAKE actually goes to pSTAKE holders. And there's obviously a little bit of trickle down to XPRT stakers as well, because again, they're part of our broader ecosystem. And so what will happen is that, similar to X Sushi, which accrues rewards from all of the financial activity that is happening on the sushi application, a certain amount of fees is going to accrue to the pSTAKE stakers. So I think that's how we're thinking about the pSTAKE token.
Yeah, definitely some opportunity for alpha there. So what do you think about the landscape for liquid staking solutions derivatives? What will this look like in 2 to 3 years from now? And how many solutions will gain significant market share?
So that's a good question, right? Because if you look at Lido Finance, has more than 6 billion in TVL, and it is orders of magnitude bigger than its next biggest competitor. If you go to DeFiLlama.com, which is again this sort of application that gives you rankings of various DeFi applications. So yeah, I think from that perspective, again, similar to the numbers that I quoted earlier, the total market cap of POS coins is north of $600 billion. Out of that, I think in total about only 7 billion has been captured on liquid staking platforms. So that is just close to 1% of the total market cap that has been captured on liquid staking platforms. So you can kind of see and we have newer POS coins coming every day. All of the new chains that are being launched, they're all pretty much unanimously POS or some kind of version of POS. So I think from that perspective, there are a few growth factors. So one is the market cap of POS coins increasing with respect to the current coins increasing in valuation. Second is the addition of new POS coins. The third is increase in staking ratio. So like I said, only I think 110 or 120 billion dollars out of the 600 billion plus POS market cap has been staked today. So the growth in the staking ratio itself from say 25-26% to say 50%. So I think from that perspective, 3 years from now, I think some of the biggest DeFi applications, you look at Aave today. I think Aave, if I'm not wrong, let's go to DeFi Llama. I think it's about 15 billion last I had checked. Yeah, today 13 billion TVL for Aave. I think we'll soon see Lido overtake Aave in terms of having the maximum amount of TVL. So I think we'll see and again, I think from people think it's a sort of winner takes all market, but I think it's still so early because in 2015, 2016, if you talked about proof of stake or delegated proof of stake, people would laugh at you because it was so academic in nature. In 2018, early 2019, we saw the launch of Cosmos and Tezos, which were the first, proper delegated proof of stake chains in production. And so we tend to forget because we're in the industry, we tend to forget how early it is. And so it's literally like POS as we know it has only been in production for 3 years. And obviously crypto world there's massive amounts of FOMO, but I think we have to take a step back and be like, okay, this is super early. I think we'll have there is room for about sort of 5 or 6 applications to coexist, in my opinion. Applications that are focused on different sort of ecosystems. So like pSTAKE, for example, is betting heavily on the Tenement ecosystem. Right, so we want to do ETH2 and other assets as well, but Tenement sort of will always be our, something that we bet on early. So yeah, I think we'll see a whole bunch of liquid staking platforms and applications in the market in a couple of years from now. Huge amounts of TVL, based on the growth factors that I mentioned, which is growth of the overall POS market cap, growth of the number of POS projects, growth in staking ratio.
So we're basically in the very early innings, if not the first inning, of a story where only 1% of the potential has been captured at this point of a potential over $1 trillion market market share. So very exciting. And yeah, sometimes you forget being in the industry, how new this stuff is. And it's a good reminder there that we are still very early in the ballgame here, folks.
And just to jump in, one point is that we speak to a lot of traditional hedge fund managers and family offices. They're just discovering about staking itself, right? And staking is so new for them. And I think ETH2 will be that catalyst, the merge, where people will actually know what staking is, and that will be the huge development of the fixed income markets in crypto, because now so many family offices are sitting on huge amounts of ETH. And obviously, then once they figure that out, then they'll want to exposure to other POS assets, and I think it's still super early.
Yeah, and it's interesting that you say that ETH 2.0 may be the Trojan horse to get these institutional investors, fully into the staking ecosystem. So, really looking forward to when that happens, end of this year, beginning of next year, and to see what kind of possibilities come with the kind of capital inflow that happens into proof of stake. So, talking more about the dynamics of pSTAKE, persistence, and Audit.One, could there be potentially a conflict of interest between these bodies?
Yeah, so high level, our journey has been very similar to that of Terra, where Terra is a tenement-based chain. They have Chai as a third-party application, and they have Anchor protocol, Mirror protocol as in-house application. We've taken a lot of inspiration from the folks at Terra, where Persistence is a tenement-based platform, and we have Comdex as a third-party application, and pSTAKE and Asset Mantle, which are again two in-house applications. Asset Mantle is something we haven't spoken about too much externally. We'll be sort of going out into the market and speaking about it more.
Hey guys, everyone watching the live stream, just bear with this one moment. We're having a connection issue here. We're going to get Tushar back on the line in just a minute here. So if you just bear with us. All right,
Yeah.
Tushar, picking right back up where we left off. Yep.
Yeah, sorry about that. Yeah, talking about the relationship between the different entities and different projects, Persistence, pSTAKE, Audit.One. So kind of high level talked about, how Terra is structured and how we've taken inspiration from them. I think crypto is one space where, the sum is greater than the individual parts. So 1 + 1 does not equal 2. And because we were involved in the launch of Cosmos Hub and we run I have some connectivity issues. I hope it doesn't drop off again. But I'll try to wrap this up fairly quickly. But yeah, in general, what we are trying to do is trying to see for the token holders, or XPRT holders, pSTAKE holders, how they can benefit from the overall applications succeeding as a whole. So as similar to what we have mentioned in terms of pSTAKE being a fee sharing token, whereas there's greater financial activity on pSTAKE, pSTAKE stakers accrue more fees, and XPRT stakers accrue more fees. The difference between XPRT stakers is that they accrue fees from all of the applications in the persistence ecosystem. So they're essentially betting on the different asset classes that persistence is going after. So whether that is commodities for Comdex, whether that is liquid staking for pSTAKE, and whether that is NFTs for asset mantle. So the three applications in our ecosystem. And so XPRT stakers are betting on all those three. pSTAKE stakers are betting on just liquid staking within those three asset classes. The backstory of Audit.One is that it started because we were unable to raise capital initially, and we basically funded all of our development and salaries by just running validator nodes on different POS networks. And this is during the during the depths of the bear market, where no investor would spare their capital, even though we were an extremely ambitious and extremely ambitious team. So we just relied on staking rewards and liquidating those staking rewards to be able to fund development. So it started off as like a way to just survive, but since then we've become the largest validator in Southeast Asia and South Asia, and not only do we run validators for ourselves, we also white label validators for institutional fund managers in Europe and North America, which, by the way, will be liquidity providers to pSTAKE. So it's like it's like connecting the dots sort of backwards, as the cliche goes, where because you run validators, you can build relationships with fund managers who then become XPRT holders and liquidity providers to pSTAKE. So it is so difficult to explain that externally, but basically because we run validators, some of our other products succeed. Because we know how POS protocols work, pSTAKE succeeds. And so I think that's how the different dots connect. But from our perspective, we'll always make sure that the three pillars on which a good at some point things will blow up. Second is community. If community doesn't back you, then you will fail. And so we always listen to our community and try to incorporate as many of their feedback. And then finally is like your ability to do BD and crack like sort of big deals and make sure that persistence, pSTAKE, and all of the products that we create become more institutionalized. So high level, I think those are, we've created this sort of full-fledged team with back-end, front-end developers, blockchain developers across Go, Rust, Solidity, and growth, BD, marketing folks, researchers, designers, to make sure that we have all the elements in place to make sure that we have the greatest chance of success. And then interweaving these products together to again have it's a probability game, so increasing the chances of the success of the persistence ecosystem. So that's kind of how we're thinking about it. And
great insights there. And from my perspective, it almost seems like the way you walk in these different arenas helps with your business development and could potentially translate into the XPRT token being staked with more participation rate. Maybe this is why, because you have these relationships because of Audit.One, because of all these products that have been built. So nothing but positive to say about the ecosystem so far as terms of staking data and metrics that we're showing on the site here. And to just wrap this up here with a final question. You've already named some yield opportunities here, but a lot of our users and community listening, I'm sure, are eager to get in there and stake some kind of asset, right? So in your mind, what is the best yield opportunity currently available within the persistence ecosystem?
Yeah, so I think there's a few options. One is just buying, if you're lazy, then maybe just buy XPRT and stake it and get 37.5% APYs and upside on all of the other products that we come out with. And obviously, if you're an Atom holder, it would be great to be an early user of the pSTAKE application. We'll most definitely be incentivizing all of the early users of pSTAKE heavily. The mechanics and the numbers are still being worked out as we speak. So I think those are the two biggest opportunities right now. But yeah, I think definitely the easiest way to get involved is to buy XPRT. We're now on two of the big Cosmos decentralized exchanges, which is Osmosis and Emeris, and on three centralized exchanges, which is Forbes, Ascendex, and Gate, and then KuCoin as of tomorrow. So 4 centralized exchanges and 2 decentralized exchanges. And then obviously you can stake via the native persistence wallet, which is wallet.persistence.one, or you can stake via Kepler, Cosmos Station, which are native Cosmos wallets.
Dropping some free alpha there for our users. Much appreciated, Tushar. So it's been great talking with you today. Tushar, how can people follow you and learn more about the stuff you're working on with Persistence?
Yeah, so @Persistence handle. pSTAKE has its own handle, which is pSTAKE Finance. And then you can I'm always available on DMs and things like that for opportunities @Tushar307. I think it works the best in terms of engagement and.
Yeah, absolutely. And we'll be sure to have all those links up for you guys to reach out to Tushar on Twitter and all the other subsidiary links as well. So for everyone watching, please check out our previous episodes of Staking Mondays. We go live every Monday and talk to industry leaders within the staking industry to share information with our communities. Be sure to smash the like button on this video, share it around, and subscribe to our YouTube channel. Thanks, guys. This episode was sponsored by Gravity Dex. We're about to watch this clip here, and take care until next time, guys. Happy staking.